Hey everyone, Dan here. Welcome to a rare weekend video. Today we're going to take a look at Wish. And before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. So let's jump right in. So we have a lot to talk about. First, we're going to take a look at the chart, and then we'll take a look at some sort of supportive chart data. And then we'll flip over and we'll take a look at sort of the case for potential manipulation by way of short sellers and institutions and sort of see what we might be able to uncover there, because I know there's a lot of differing information out there in the webiverse. So first on the chart here, the first thing that jumps out to me is right about where it's sitting now, this 1003, is at a very key support level. So I would look for a lot of strength in this area, because if you look at all of this previous support and resistance, it's just below where it's settling right now at 945. And this is obviously not to say that I think it will or that I want it to drop down to 945, but I would just say that we know from the many videos that we've done in the past that price zones that encompass previous resistance as well as previous support, that it is both of those things are extra strong for future support and resistance. That said, additionally, this area, much closer to where it is that same thing, 989. So I think you have a little zone of support here to possibly prevent the price from falling too much. You see this previous support here, previous resistance there. I didn't look back any further to see, but yeah, wild swings in this one for quite some time. We take a look back the last 6 months or so. Yeah, so several sort of wild swings. See this big push up, an enormous drop down. So it's lived quite a life in its short time. But yeah, right now where it's sitting definitely has a lot of potential support there. So I would look for that to kind of be an area of cushion. If we zoom in, since this far out view isn't going to do much for us in terms of shorter term trading, if you're looking for either upper price targets or potential dip buying opportunities on price strength, let me plot a few of these and then I'll tell you what I mean by what I just said. So these are similarly prices with repetitive support and resistance that we see in previous price action. So since it has gone through this sort of period of selling off in the last few days and now is settling into this kind of sideways, slightly down consolidation channel, what we'd be looking for is to buy a dip on a show of price strength. So what this would look like, and the way that you can use these price targets to the upside, is if the price shoots up on Monday and makes an attempt at this 1112 and it hits resistance there and bounces off and starts to come down a little bit, what you can do is you can say, okay, it's shown a big run of price strength. And now I'm going to look for a small pullback, and I'm going to buy that dip that is surrounded by a larger show of price strength. So this is the big show of price strength, and then it's going to take a minute to breathe, and it's going to come down and approach that 1066 zone, which we know should offer a decent amount of support. AKA, there could be a nice bounce off of there, and we make another run at 1112 and maybe breach it and get support at 1112, and then off to the races. So what you could do is look at sort of averaging in at 1080, 1075, something like that, and dip buy this down to this 1066 zone, see what it does there. If it falls through, then you'd be looking at maybe catching it around this 10 and a quarter, something like that. Or that 989. And so you could either say that you're going to average down to a certain amount, to 920 or something like that, and if it can't hold that, or I'm sorry, to 1020, if it can't hold that, then maybe you're going to consider that a stop loss, what have you. But the idea is you buy into this price strength on a dip, assuming that the strength, the overall trend, is going to continue up and give you additional strength dip buy opportunities. So that's what I would look for from those upper targets, unless you just wanted to look at those as possible take profit / trim positions. But I don't know, if that's what folks are looking for. So that's what I would see price target wise. If we look at this channel that I'm talking about, let's just get rid of all of this noise. So it obviously had this big run up and this sell off, and now it's basically just in this slightly down consolidation channel. So it's slightly down, but it's mostly moving sideways. A lot of shared highs and lows and sort of settling mid to upper channel on this right now. So it could, be giving it an opportunity to hit that strong support zone that we talked about right in this area and sort of wedge itself out of this channel where it's meeting the support zone. So that's what I would potentially look for on that end of things. Also, in the shorter term, if we want to take a quick look at the MAs, MAs are all bunching up. So that's another indication that there's consolidation happening and that you could be looking for them to unwind in some way, shape, or form. So you see over here, for example, all the MAs were bunched up, and then they started to unwind, and they clearly unwound in a fully bullish formation. The 20 was on top of the 50 was on top of the 200, and the distance between them was increasing. So that's where you could have said, whoa, big show of strength here, big push up. This is a good buying opportunity. And then it's holding over the 20 all day, all night, and then sort of starts to stumble into the next open. And then you see everything flip on its head and turn bearish right around this area with all these bearish crossovers. So, that's what I would be looking for as these MAs unwind at the beginning of the next big move. On the RSI front, you're just a bit above the midline, and that's actually pretty high for the sell-off that's happened, but I guess hugging the midline is also pretty indicative of relatively sideways motion of consolidation. And then here, this MACD, it's sitting right on the baseline. That MACD is reading 0.007, so basically sitting right on the baseline. So it has a bunch of pent-up potential momentum, potential energy stored for a big move in either direction. The question is just going to be which direction, but you could be looking for a big breakout, either up or down with that yellow MACD line, sort of indicate which way it's moving. If we look at the volume lately, big volume, obviously back here on this run up, and then bigger volume on this sell-off, and then has been relatively flat. Some good buying pressure here, but it didn't last very long, and then a bunch of low volume throughout the rest of the day. So I think, it's definitely going to need pickup in volume. There's a ton of sell volume today. Potentially people feeling the weight of the weekend upon them and wondering, if maybe this was its brief run and now it's over, and wanting to sort of lock in what profits they could. If we want to take a quick look at the volume analysis, you see this huge sell pressure. That's an amazing ratio right there, 8.05%. In just one space, like not cumulatively, just at the $9.95 price points. So huge, $3.3 million in sell pressure versus $370K in buy pressure at that price point. So a bunch of stop losses or what have you being taken right at that price point. $9.98, another big one. 4% still a really high ratio. And these are like all basically on the red side of things, more or less. There's some good buy volume coming in at that $9.96 and smack dab on the $10 is still more sell. Oh, $9.99, more buy than sell. So yeah, but to me the big thing is just under that $10, there's clearly like a bit of a psychological zone there, and there's a bunch of stop losses that were set there. Question is now, if it were to dip down there again, is there still a bunch of sell pressure there, or did today consume all of that sell volume? And now if you were to dip down there, you would see a bunch of buying pressure coming into the market. That's often what happens as we sort those things out in a day-to-day instead of like intraday perspective. If we want to flip over to the data, okay, so if you haven't seen videos on this channel before, there's a few things we look for in order to say, there's some gain to be had from the short interest that exists in the stock. One is we want to see relatively high short interest. Historically speaking, that's over 10% is sort of like the bare minimum. Over 20 is really, really eyebrow raising, and obviously above 30 and 40 is really like earth shaking kind of numbers. The other factors are we would like to see a high fee to borrow the shares to sell short, because a high fee is going to put a lot of pressure on the short seller to want to close that position because they're incurring this fee as they hold that, or as they wait to buy back that stock and close their position. And so the third thing is price strength. So, this price strength that you saw earlier in the week, that would obviously put a lot of pressure on short sellers because they get so underwater so quickly. So if you were to couple a big run up or even just like relatively stable upward pressure and price strength with a high fee, that gets them so underwater so quickly that it's very apt to cause them to close positions. So here you see a fee in the double digits. It's okay. There's a lot of shares available to borrow. This is just from one broker. This is just Interactive Brokers. So fee in the double digits, it's okay. It's much better to see this like above 50%. We've seen some go as high as like 260%. But then you would see the availability much, much, much lower. So there's a lot of shares available to borrow and sell short. So there's a lot of additional selling or short selling pressure that could be coming in to this one, it seems. But it would be good to see that fee creep up if there is something to gain from the shorts that are in Wish. If we look at the short volume ratio, with this recent run up, you see here, short volume ratio was just in the teens on the 8th. On the 9th, it jumped up into the high, mid to high 20s, which is very, very high. Anything in the 20s is pretty high. High 20s is very, very high. Over 30 is bonkers. So we see here this big jump occurred from the 8th to the 9th. If we look at when this stuff all happened, this was the 8th. And on the 9th, the short seller said, we can knock this down by just taking out a ton of positions and selling them into the market, creating an outsized supply and driving the price down, down, down. And you've seen that ever since. Though it did get very high and then has sort of did a pretty good job of stabilizing today, even though it has this very high ratio in the 30s the last couple of days. One of the really interesting things to me, now this data is kind of old at this point because we're waiting on new data from the SEC, which they just haven't released yet. So the SEC, you can actually see it over here, the SEC releases data on fails to deliver in halves of months. So April first half, April second half, May first half, and we're waiting on May second half. So that's why right now you only have through May 14th. But you see this huge uptick in fails to deliver on the 13th and 14th. And my question is, does that continue in the following days, or does that like significantly die down back into the say 5-figure kind of area? That's what I really want to see, because one thing that's a symptom of naked short selling, I don't 100%, I know why people would naked short sell even though there's so much availability, but so it's just less common when there's so many shares available to borrow, which we see over here in the millions, I'm sure in the tens, maybe even hundreds of millions, for a bunch of naked shorts to be thrust into the market. It can happen, and this is a symptom of it, these fails to deliver, especially lining up day over day. But we'll have to see what that second half of the month data looks like to see what may or may not have happened. Additionally, those came in on, what was it, the 13th and the 14th of May. And there we saw this huge spike in volume. I don't 100% know what happened that day to cause that huge spike in volume, but that alone could account for many, many more fails to deliver, just because there's much more volume coming into play. 3-4 times the volume of the previous days. So more to be seen with that one. It's sort of a question mark at this point. As this data set stands, there's about 273 million shares in the float, and shares, short percentage of the float, 15.75. So, about mid-range in the significancy scale. I know that there's been a lot of information that this is closing in on more like 50% as of late. That could certainly be the case. This is old data from May 28th. Again, this is just the chunks in which this data is provided. So some estimates that come from like Ortax or Bloomberg terminals, that's where people get these additional daily figures or even hourly figures. And so that could be correct. And that could be seen in this huge increase in the short volume ratio, would back up something like many, many, many higher percents of the short being of the float being shorted because of a bunch of recent activity coming in, which you would also expect that to happen when there's this much of a run-up in almost any stock. That's going to cause a bunch of shorts to turn their heads and say, oh, this is clearly way like a huge overreaction, and people are going to take profits, so we're going to pile on. While they take profits, we're going to profit by selling it short. So it wouldn't surprise me if that sort of grabbed the attention. Now, if it grabbed enough attention to bump it up 35%, that's another question. I don't know. But, it's something that we'll see as the days and weeks unfold, no doubt. On the institutional side of things, there has been some really good funds that are holding this. Founders Fund, you see BlackRock in here somewhere. Yeah, BlackRock, Morgan Stanley. I mean, these are like, very renowned names. These aren't like throwaway institutions that are just buying stuff. So, there's definitely some interest from legit institutions out there to hold this one. The other thing that I wanted to look at, speaking of like legit things that are outside of this craziness that we've seen lately. Now, take analysts for what it's worth. A lot of times they are, not the most accurate, but to the extent to which people and or institutions follow the advice set out by analysts, you do see that based on 11 analysts, Wish has a cumulative buy position, and the current price is at $10, and the average price target from the analysts is over 18. So that's nearly doubling the price of the stock as it stands right now, even after that big run-up. That big run-up didn't even get it to the average price target, right? Because that got it to $17.65. So even the analysts, which aren't like jumping in to try to like pump stocks typically, they have it well above its current price point of $10. So the extent to which, not to say the analysts have analyzed it correctly, but just to say that they have influence oftentimes over retail, over institutions, because they will sort of just blindly follow some of these buy and sell ratings, that can certainly play a factor. But, what I'd be looking for in the week ahead is obviously another show of strength, and looking for some of those upper price targets that we charted in the first half of the video. And besides that, we'll keep an eye on like some of the short interest data that keeps coming out, and especially those fails to deliver, see what might be going on. All right, well, thanks a bunch for watching. I definitely appreciate it, and I will see you in the next video.